cover, which is yung everything sa sarili, life, paying the same price.
Ang maipapayo ko rin sa mga first home buyer, no? Hindi sila kukuha ng bahay na hindi nila kayang bayaran.
And what is the implications in case you pay the deposit and bank will say, I will no longer give you the approval final?
Yes, so with Kayanga, the criteria for that particular product is like you have to be in the same job for at least a year.
Welcome everyone to another episode of the New Zealand First Home Buyers Guide and Insights. And this is the 36th episode, actually. So we're thrilled to have you with us tonight. And in this episode, we'll be discussing essential tips and pointers for getting your home loan approved, and directly from our fellow kababayan, who's also a mortgage broker here in New Zealand, just recently got her license. All right. So yeah, we're just kind of waiting a bit for her to turn up, and shortly she'll be here soon. Anyway, if you're watching us from any part of New Zealand or around the world and you're planning to come to New Zealand, let us know in the comment section below. If you want to reach out, engage, participate, feel free to ask questions related to our topic right now, which is first home buying in New Zealand, especially if you're new in New Zealand and it may not be your plan yet to buy a house, but definitely this is something you look into. You're considering, settling in New Zealand in the future. You would like to have a home that you can call it your own. So if this is one thing that you are considering in 2 or 3 years from now, let us know in the comment section, and just ask questions as to what will be the steps. Although we have done so many episodes already in the past, especially with Mary Ann. Oh, by the way, I would like to inform everybody that Mary Ann, I think she's traveling right now to the Philippines for her holiday, but it's more on an important thing that she needs to settle in the Philippines. And in 2 weeks' time, she'll be back again to join us. If only she can get a good internet connection there, I'm pretty sure she would be joining us. But at the moment, she's flying. So we hope for your safe trip, Marianne. And how do you say it? Hopefully everything will be settled, and once you come back here, you will have a more beautiful smile. Right, without much ado, I would like to quickly introduce you. And because I am so excited to introduce our guests for this episode. I'm so happy that I have this person with us, because otherwise I'll be alone without Mary Ann. She is actually a Filipino Kiwi who has made significant strides in the field of home lending through various financial institutions here in New Zealand, with 6 years of experience as a customer banking consultant at Westpac, focusing on home lending. She recently transitioned to become a licensed mortgage advisor with Mortgage Lab. I've heard of this. Yes, I've heard of this Mortgage Lab. And her passion, of course, for helping fellow Kiwis and kababayans buy the dream home or property is unwavering. So her experience at the bank equipped her with the knowledge and skills needed to pursue her passion further. Now, as a licensed mortgage advisor, she is dedicated to providing clients with quality and pleasant lending experience, ensuring they achieve their home ownership goals. And this is really very good for us, especially sa ating mga kababayan, kasi she is kapwa Filipino. So it would be more comfortable communicating with someone who understands our background, our traditions, our beliefs, and of course, the number one is language. Because I have to admit, when I first came to New Zealand, it was really a struggle to communicate with the natives or the locals here. So having a Filipino mortgage broker here in New Zealand is really two big thumbs up. Yep. So let's welcome. Who do we have? She's already here, joining us,
Yes.
Josie Coronado.
Hello,
Thank you
good
so
evening.
much, podcast. Right. How are you tonight?
I'm good. Yeah, I'm excited. Thank you for having me.
Yeah, it's a pleasure to be to introduce fellow kababayan to our fellow kababayans here in New Zealand, especially who are new to New Zealand. We have so many new immigrants recently, and they are now residents. And of course, what's the next step after residency is getting
Yeah,
our
to
first
get
home.
your dream home.
Right.
Yes,
Okay.
yes.
All
All
yeah,
right.
I'll give you the floor.
Okay, so yes, it is indeed a privilege, no, and a great honor to be a part of your show. Thank you for the invite, Juby. I'm both nervous and excited because this is my first time to do a podcast, a live show like this. So just alalayan mo ko.
No.
All right. Okay, so I have seen some of your segment, no, other episodes, and I said to myself, there's already a wealth of information there, no? Parang meron kang you already have a treasure chest of information, important information, and I said to myself, what can I do? I mean, how can I contribute? Okay. So, and I also want to do something different, no? Something na talagang applicable that they can use themselves, no? You may either be looking to buy your first home. You may also want to purchase your first investment property, like a rental property, or maybe you are already in the property ladder, no, and you already have a mortgage, and your goal now is to save on interest and pay off your mortgage early, no, earlier.
That's me.
So yeah, so for tonight, I have divided the presentation into two parts. So the first part would be on pointers and tips, no, for those aspiring to become homeowners and those who already have a mortgage. And the second part is I want to help our kababayans, no, with regards to this apprehension, no, their fear of talking to a lender, okay, doing an actual application because they are somehow intimidated, no, na kung minsan the lending officer is coming across too strong, so nahihiya, so gano'n.
Yeah,
So
yeah.
we'll do an actual lending application tonight if time will permit that.
Yes. Awesome.
And as we fill up those fields, no, bibigay din ako ng mga lending criteria. Yeah? Okay, so
Sounds
I'm
great.
excited. It's my first time, so I'm excited to share this information, this knowledge, which I have gained from my 6 years of experience as a lender and also as a mortgage advisor. So I just started this role last February, and I just got my full accreditation from all the banks last month, May. Yeah. Kaya medyo ano pa tayo?
Yeah. Yeah.
Medyo very excited. Yeah. Very energetic pa. All right.
Okay. Just
Okay.
to
So
because I just want to quickly greet my colleague. Actually, I'm surprised that she's watching right now. Hopefully, she's still there. All right, that's Simran, and yeah, she might be interested in buying her second home, or I don't know how many homes she have already. Oh, good.
so that would
Right.
be investment. Okay.
Do you have a
So I have yeah. All right.
Okay.
So siguro first siguro the first question that we should answer is why do I need to see a mortgage advisor instead of applying directly to my bank? Okay. So let me just tell a little bit story about myself. Okay. So to answer that question. So when I was at Westpac, okay, so I was one of those lending officer who assess customers, no, to get loan approval. So I can approve up to $1 million of lending. Okay, so that is if the customer is meeting the criteria of the bank. No, so what if the customer does not meet the criteria of the bank? So I cannot approve it. Okay, so I have to send that application to the credit committee, who has the authority to approve those applications that are not meeting this criteria. Okay, but before sending that application, I need to believe to that application. No? I need to mitigate the weaknesses. Okay, so may mga weaknesses kasi not meeting the criteria, meaning there are weaknesses in the application. So I have to make an explanation why the bank need to approve this loan, even though it's not meeting the criteria. Now, when I send that application, it will return to me either approve or not approve. So approve, yes, magdidiwang kami ng customer, we'll both celebrate. But if not approved, we both feel bad about it because we both work hard for that application. Hindi lang ako, pati yung customer, no? You could see how many requirements, how many documents, no? How many explanation, how many meetings before you get that application done. So at the time, what would I say to the customer? So either I would say, let's wait 3 months. Okay, let's improve your account conduct history because you need 3 months of good account conduct on your bank transactions and 6 months of good account conduct or history on your lending facilities, not credit card or high purchase, 6 months. Okay, so I would say, okay, we have to wait 3 months. Or I would say you have to see a mortgage broker. Okay, go to a mortgage broker because we cannot help you. Okay, so at the time, I mean, how do I regard mortgage broker? So I would say, oh, they handle difficult lending scenario, okay, and then they handle. I mean, they know all these criteria from other banks because it's so hard to become a mortgage broker because there are little things you have to learn. Okay, aside from learning, you also have to handle difficult lending scenario. So at the time, I said, oh, how I wish I can help this customer. And there were times also that I would meet Filipinos at the branch and they would say, oh, you're Filipino. Can you handle us? Can you handle our application? And I would say, I cannot do that because you already have an appointment with another lender and I have another customer. But I said, how I wish I can choose my customer. So now I'm in that position. I can choose my customer. All right. So this experience, okay, so I'm going to give you the tip, okay, those tips and pointers. And I have prepared my slides for that. Okay. So they say, go to a mortgage advisor because they can get you a better interest rate. They can get you the best deal in the market. So we always hear that. So ano nga ba yun? I mean, what is the best?
Because I just have a question.
Yes.
You mean to say
You have a
seems
question,
like
Juby?
the bank has a higher standard than the third tier lenders? Is that what you mean?
Yeah,
Mas mataas ba
the
yung-
bank have higher standards than the second tier than the non-bank lenders. Yeah, they're more lenient. If the bank would only accept, for example, 1 or 2 defaults, the second tier lender might accept 3 or 5 defaults. For example, on the account conduct. Okay. All right. Okay. So let's talk about the interest rate because we always say that the mortgage advisor gets a better interest rate. Have you heard of that, Juvie?
I don't know. I dealt directly to the bank. I'm
All
not
right.
sure.
So you didn't know if you would be able to get a better interest rate.
No.
Okay. So let me just show you this one. All right. Can you see it now? No.
No, you can click on the present at the bottom. Oh yeah, I'm gonna add this. There you go.
Let me just do that one again. Present. Okay, so I'll just bring that up, make that big. All right. So when you said carded rate, advertised rate, that's the one that is open to the public. Okay, so this is a real scenario. This is real customer, no? So just a little bit background about this customer.
Yes.
He is with a second tier lender. and the interest rate with the second tier lender is 9.99. Okay, the interest,
Wow.
the loan term is 30 years. So when I did this application, I'm not yet accredited with this bank. So I did it with another bank, and the other bank did not approve the application because they said because of his age, he is 61, they can only give him 9 years long term. So I can, if that is 9 years, my customer can't eat anymore. Okay, and then I explained to them the exit strategy, why they have to approve the 20 years term that I'm asking. No? So from 30 years, I was recommending 20 years loan term. And I told them that the exit strategy would be my customer, when they retire, they would downsize, no? From 3-bedroom, they can just have 1 bedroom. So another exit strategy would be they have 2 children who would be professional soon, and they're willing to take over the mortgage or be part of the mortgage. Okay, and then there are other things the lender were not happy about the application. They said the savings is too small, and I explained it's a new house. They already they have to buy other stuff for the house. But the important thing is they were able to pay the mortgage on time. And they would say that the LBR is too high, but I said the LBR is just 60%. High LBR is 80% and more. So that made me realize that the lender doesn't really want to lend money to him. Okay, so that bank doesn't want to lend money to him. No, so because all those mitigations are good, but she did not accept it. So I told my customer, just wait until I get my accreditation with your bank, and we'll go direct to your bank. So what happened to the bank? So when I sent the application, I received the approval. So on the day that I got the accreditation, on the same day I sent the application, and then I got the approval, and I rang the lender and I told her, thank you so much that you have approved this application. What are your conditions? And she said, there's no condition, Josie. I said, no condition? You mean it's already approved, ready to be settled? I mean, we'll just agree on a settlement date. She said, yes, you had made a good mitigation. You have covered everything. And that was a good presentation. So what is good to this bank was not good to the other bank. So that was the scenario for this one. So we get the 20% equity here, meaning to get this advertised rate, you have to have 20% deposit at least. So if you can see, 6 months is 7.29. So when you are with your bank, when you apply directly to them, they would give you the advertised rate, because that's the rate that they're telling that they were advertising. So that is the rate that you will get. All right. But when you have a mortgage advisor, okay, the mortgage advisor, once you receive the approval, will send an email to your bank and will ask your bank, what is the best pricing you can offer our customers? Okay, so why are they giving a lower interest rate to mortgage advisors and not to you? Okay,
Yes.
because there is a competition. The mortgage advisor can send the customer to the other bank, to other bank competition. So for them to keep your business, they would offer their best rate. So that's the rate, and which is significant. Let's look at the 6 months, 7.29, 6.89, 7.24, 1 year, 6.85, and 18 months is 6.89 and 6.65. So that is a significant reduction on the interest rate, Juby. Okay, and if you can see, there's also a cash contribution of 6,150.
Oh,
All
that's
right.
a big amount.
So my customer was so happy. Yeah. I mean, just imagine, from 30 years to pay, it became 20 years to pay, and from 9.99, he got this one 6 point. Yeah, he actually asked me for we split the loan into 3, so we got the 6.85 and the 6.65. Those one, and another 6.65. So yeah, so that's one.
That's a
So that's one scenario. Now we'll go to the second one. Yeah, that's a good one, Juby. Okay, so let's go to the second one. So this one is a top up, loan top up. So you can also have a special rate on your loan top up. So this customer wants to fix the bedroom of the daughter who's getting married and wants to do some repairs also for the bathroom. Okay, so we top up the mortgage. And if you can see the carded rate over here, that's the advertised rate, no? And that's the deduction. See, that's the discount. So if you can see for 6 months, has the biggest discount, 1.06. So it's 6.89. So when the mother saw this interest rates, she also decided to fix her loan, her ongoing loan. So because she has a mortgage and it's split into two, one is on floating and one is on fixed. The one on floating, she decided to fix it when she saw this rate, and she also got the same interest rate for the top up and the main mortgage. Okay, so this one doesn't have a cash contribution because it's just a top up. Okay, so now the other one is again from another bank. So my customer here is 60 years old. Okay, and he said he had seen a number of mortgage advisors, but after having initial meetings with them, they won't call him anymore. They won't see him anymore. So we're so happy that we were able to get this deal for him because of his age. All right, it's hard to get lending when you're on your senior age already. Okay, so he said after talking to all those mortgage advisors, they disappeared when they learned his age. All right, so yeah, so he was so happy. So this is actually a second chance home buyer, no? For when you have when you become a first home buyer, and then you have a separation, and then you can apply for a second chance home loan. Okay, so that's his scenario. So this is the second home for him for the new wife. Okay, all right. So as you can see there, the interest rate is also good. No, so if you can see, there are special rate. So 1 year has a regular rate, and there's also 1 year special. So what's the difference between the two? So this is the advertised rate, no, Juvie? So why is there special, and why there is this thing that is also same term but not on special? So you get the special rate if you are banking with them, okay, with your bank, and if you have your salary paid to your bank account, so you would be able to get the special rate. So if you are a new customer to the bank, or if you are a customer of the bank but you don't have your salary paid to them, you'll just get the regular rate. So this is the advertised rate. But as you can see, your mortgage advisor they were able to get a better rate, lower than the special rate. No? So if you can see, 1 year is 7.29. Here, 1 year is 6.99. See? So we can even get lower rate than the special rate. So 2 years here is 6.75. And here it is 6.75. Okay, special. So that one is the same. So 18 months is 6.89. Okay, here, their 18 months special is 6.95. So it's lower. Okay. Do you have any question at this stage, Juby?
Yeah, just realize that special rate is only when you're banking with that particular bank. But what about if it's a second tier
Yes.
lender? Will they also offer lower rate? As low as the bank, or
normally second tier. No, because they're taking the higher risk. Remember, you'll only go to the second tier lender because you cannot get lending from the main banks, no? Because the main bank doesn't want to take the risk of lending you the money. So to compensate that risk, they would charge you a higher rate.
Yeah.
Okay. All right. So this one, if you can see, there are two set of rates here. No, one, there is a special and a standard, and there's also a one here that is carded, and this is the actual rate. Meaning this came from two banks, no, two different banks. So I have one customer, but we got two approvals from two banks. So this is a scenario when my customer was in a rush to get an unconditional approval because we are already working at clause. So the cash out clause means you have the sales and purchase agreement, no? So you are already in contract with the owner of the property. But the owner of the property decided to have this cash clause in the agreement, meaning if there's another buyer coming with an unconditional offer, like a cash purchase, no? Because it's already unconditional, the owner of the property will send you a notice, for example, 5 working days, for you to come up with an unconditional offer. So they won't accept the other one. So that happened under this scenario, no? So my customer got this contract, but we don't have the approval yet. But there's another buyer coming to the picture and wanting to buy the property, and this buyer is in a better position because he already has an unconditional offer, no more condition. There's already an approval. So the seller contact the solicitor, and then the solicitor got in touch with my customer and said, we are now working on a cash clause. You have to get your approval in 5 working days. So we have the application with their bank, but their bank is asking too many other additional requirements, documents. And then I have no option but to ring other banks. So I rang all the banks and asked them, I need an approval in 5 working days because we're already working on a cash clause. Because normally an approval would take 10, 15 working days, no? But this, I only need 5 working days. So all the other banks said, no. Is that person my customer? I said, no, okay, we can't do that. And then we cannot do that, there's long queue. But there's one bank who agreed to look on this application within 5 working days. So I get 2 approvals for the customer. So it's for the customer to decide which one is more acceptable to her. So she decided to go with her bank, although her bank made her life difficult with all the many requirements, because her bank gave her a better offer, no? The interest rate is lower and the cash contribution is higher. The other bank was only offering 3,000 something. Okay.
Yeah.
All right.
That's
okay. So we went to this bank. Have you heard of that? That you have approval from 2 banks? I said, oh, I mean, I feel, I mean, I'm somehow, I feel I feel bad for the other bank who accommodated my request in 5 working days. Now I felt bad about that, but my loyalty, I mean my loyalty is to my customer, not to the bank. Yeah, I want the best. The best interest is for my customer. Okay.
At the end of the day, it will be the customer who will decide anyway. So talking about the cash back, because I remember we only got 3,000 from ANZ, and when you mentioned 6,000, that's really a lot. Which bank is it from?
Yeah, well, I cannot tell, but that it will also depend. Each bank they all have different percentage, rates for cash contribution, and it also depends on the amount of lending. Of course, the higher the lending, the higher the cash contribution. But there's also a percentage.
Oh,
depending. So sometimes we check. Okay, if there is no bank yet, we check which bank has the lower interest rate, which bank has the highest cash contribution. Okay. All right. So yeah. All right. Now, we always think that saving would only come from interest, no? You say, the lower the interest, the more I can save. No? But actually, it's not just from the interest, Juby. You also save by having the right loan product. Okay, you would be amazed on how much savings you can do if you have the right loan product. Have you heard of that? Loan structure is not just pricing; it's also talking about loan product.
Tell us more about this loan product. It's my first time to
Okay,
hear it.
so okay, it's your first time. Okay, so we always hear about fixed rate, floating rate, no? But there are, aside from fixed rate and floating rate, there are other stuff in home lending. Okay, so we have this what we call offset account, offset home loan account. So just to illustrate, for example, you have a loan of 500,000. Okay, and for offset account is always on floating rate. Now, this is their ongoing floating rate, which is 8.64. But if you have a mortgage advisor, she may be able to get you a lower rate than that. Okay. So this is the original loan amount. So 30 years, 500,000, loan term 30 years, and that's the repayment, 3,800 a month. Now, if you have a savings account and a transactional account, savings account with your bank, and a transactional account is the account that gets your salary and pays the bill. Okay, that can be tagged to your home loan account, which is the offset home loan account. So what's the benefit of that? So let's look at this. So for example, your savings account had $5,000. Okay, and because that's a savings account, every time you receive a pay, you're trying to build up your savings. You're putting, for example, $200 every payday. Okay. And then your transactional account has an average of about $500. Okay. So see, let's check what that one can do for you. Okay. Oh, sorry. Okay. So can you see the rest of the...
It's just the home loan saving transaction.
Can you see the rest of the slide, Juby?
It's still the same as the one you've shown
The
a while
bottom side.
ago.
Just a moment.
We will take the thing off.
Okay, at the bottom, can you see that? You could pay off your loan 7 years and 7 months sooner. Can you see that, the
So
results?
this is the offset account, right?
This is the offset account, yeah. So you would be saving about 355,000.
That's a big amount.
So what you have to do, if your bank have that facility, that kind of loan, okay, do you have an offset account? And then you say, I want to tag my savings account and transactional account. Because what will happen, aside from those amount offsetting the loan, so for example, that one, 5,000 and 2,000 and 500, you don't pay the interest for the whole 500,000 every day. Okay, because your savings account and transactional account is tagged to the loan, you only pay the interest from the difference of your savings and transactional account from the home loan account. So for example, the total savings and transactional account has 50,000. Okay, you are just paying interest on 450,000. Okay, once you have tagged those accounts there, it doesn't mean that you cannot use the money. You can still use the money. It's just that it's tagged there to give you savings on interest. Okay, so the only thing that you have to remember when you have an offset account is that you would still continue to pay your repayments. Okay, but more of that repayments will go to the principal because you're paying low interest. And if you have a savings account that earns an interest, that savings account won't earn an interest anymore. But remember, normally the home loan interest rates are more higher than the savings account interest rate. So you might be paying, for example, 7% on your mortgage, but your savings is just paying you 2%. So you would still benefit, no? Even though you won't get any interest on your savings account.
So,
All right.
do
So,
you have any,
yes.
sorry, do you have any idea which bank would normally have this offset account?
Yes. Yeah, I
What
have
bank?
taken this one. This is available on their website. So as you can see, this is a product of Westpac. Westpac has this product.
Okay.
Yeah.
We're
So you
with
just
A
need,
and Z.
I mean, you go to your bank and you check their loan products, and you would
Yeah.
see if they have an offset account. Okay.
Great. I'll
All
do
right.
that.
Okay. So that's the one. Now, just to share with you, I have this customer which loan was drawn down just last month. Okay, he has husband and wife. They have joint savings account, joint transactional account, and then they have 4 children. So all 4 children are working. So all of them has transactional account. All of them has they all have savings account. So would you believe? So 4 times 2 is 8 plus their 1, 9, 10, 10 accounts tagged to the account. So in effect, that part of loan that we have put aside, that we have split to be an offset account, is no longer paying any interest. Okay, because all the
Yes.
joint 10 accounts is more than the amount of loan. So all the repayment goes direct to the principal. Hindi na siya nagbabayad ng
Yes.
interest. So mas mabilis ma-pay off. Ma?
Parang maganda pala pag you have so many kids and they're all working.
Actually,
Well, you have
anyone in your
to.
household, basta may relation. It can be your parents too. Ayan. Kaya
Ah, okay.
palimatin mo na silang lahat sa banko mo. You can ask all your family to move to your bank so you can offset all their accounts to your loan. You
That's
can
a good
tag all their
idea.
accounts to your loan. Yeah. Anyway, I mean, you won't touch their account. It's still under their name. It's just tagged to
Yes.
the loan, so they can help you save on interest and pay off the mortgage earlier.
Yeah, yeah.
And they can
Oh,
withdraw it anytime. There's no notice to withdraw it. Okay. And if all the savings is more than the amount of loan, maybe for example, all the savings is 550,000 altogether, no, from all 10 people, and then the loan is only 500. So the 50,000, maybe one of them would like to open another savings account, so the 50,000 can earn an interest. Okay, so that's an offset
so that's
account.
not
All
like
right. Okay, so
that's
you
so
could just
good.
imagine, see, oh, you could pay off your loan 7 years and 7 months sooner. That's a big thing. You can retire early.
That's true. Oh, nice. Thank you so much
Okay.
for this.
Now, so there's another one here. So this is fine tuning your loan. So imagine again, you have a 500,000 loan, and that's the interest rate 6.75. So it's a new loan, 30 years to pay, and you are paying monthly because you're paid monthly. For example, 3,243. So that is 30 years to pay. Now, since you are paid monthly, would you feel? I mean, would it hurt you if you would increase your payment to 3.5? Okay, but look at the difference. Every month you get a big pay, and then instead of paying 3,243, add how much is that?
Yes.
200, 250 more,
50.
no? 250 more every month. And look at the difference. From 30 years, you can pay off your mortgage earlier. 24 years. And you just need to sacrifice 250 every month to reach that goal, to save on interest and pay off early. So you would be retiring how many years? 5 years and 7 years earlier. All right. So that is the fine tuning your loan. So that is if you are paying it monthly. Okay. So what if, let's pay your loan fortnightly? Okay. Why do you need to pay your loan monthly if you are being paid by your company fortnightly? Because I have this customer. He says, I'm paying my loan monthly. So, why? You're being paid weekly. Why not pay it weekly? Okay, so let's say you're paid not monthly, but fortnightly. By doing that, so it's the same amount, no? It's still the same 3,200. We divide it into two, pay that fortnightly, and see how much you can save. 23 years.
Oh,
Okay, paying it on, okay, instead of yeah. Because why it's quicker? Because instead of waiting 1 month for the principal to incur that interest, okay, you are just paying a fortnight interest. So every time you make a payment, part of that payment will go to the principal. So the next computation of the principal for the next fortnight would be lower because you have already paid part of that principal when you did the first fortnight payment. Okay, so you would be paying quicker. Okay, so remember that amount is 3,500. Let's divide that into two. 3,500 divided into two is 1,750. Okay, so you made that extra 250 every month. So let's divide it into two, 125 every fortnight. So that's the difference. You will be paying sooner, no? 20 years. So you've saved 10 years of your mortgage term. So tell me, which one can save you more on interest and help you pay your loan quicker? Is it the lower interest rate or the having the right loan structure, loan product?
definitely
Both
the
can help.
law.
It's nice to have a low interest rate and have the right loan product.
Yeah,
All right.
yeah. Both can be done. Then why not?
Yeah, both can be done. And who would give you the time to explain all these things to you? And to who would understand the way you handle your money? Okay. All right. Okay, now this is splitting your loan. Okay, so normally you would say, oh, I have a mortgage, I just choose 1 year to pay, or I just choose 1 year fixed rate, or I'll just choose 2 year fixed rate. But actually, when you have a mortgage, it's not just about the mortgage. That is also an investment. The concept in investment is that not to put your eggs in one basket, but to put it in more than one basket. No, that's the concept of diversification. So you diversify. That's just not just one kind of a term in mortgage. Okay, so the advantage of this one. So for example, this one. So this is again the 500,000 loan. So I have a 1 year fix, an 18 months fix, and a 2 year fix here. So after a year, when the interest rate goes down, at least one basket would benefit from that. Okay, the 200,000. Now, after 18 months, when the interest rate goes up, not my whole investment will be affected. It's just that part, no? That one. So that's the concept in diversification. So yeah. So good, ganun pros and cons, no? Kung if the interest rates goes up, you benefit. And then when it goes down, you benefit. And when it goes up, it doesn't hurt that much. Okay? Because you have your investment split into the three baskets. Okay. Now, we also use this splitting of loans when you, for example, you talk to your lender or your mortgage advisor and you said, oh, I'm selling properties in the Philippines. It's a family home and I'm about to receive 50,000 or 100,000. Okay, so we will split your loan. So this is the structure that we're going to do. So I will ask you, when are you expecting that 100,000, for example? Oh, I'll get that in 6 months' time, most probably. Okay, then in that case, I would structure your 100,000 into 6 months fixed rate. So by the time your 100,000 comes to New Zealand, okay, we can pay that 100,000, all right, without any penalty. Now, if you would say to me, no, actually, it's sooner. It's 3 months. In 3 months' time, I'll have that 100,000. So what would be our loan structure? So part of that 500, the 100,000, we'll do that on floating rate. Okay? It's because in 3 months, you would be paying that, so you won't pay any interest. So you just tell me, okay? You just tell your lender or your mortgage advisor what is your future expectations on your change on your financial circumstance. Okay, or you would say, oh, every year I have this annual bonus. Okay, so how much is that annual bonus? You will structure your loan You have to tell all those information to your mortgage advisor or to your lender, so you can have the right loan structure. And by doing that also, you also have the savings over there. Okay, not that much, but it's still a savings. And it is flexible because it depends, no, on when that money is coming in. All right. Question, Miss Juby.
I forgot. Yeah, later. I forgot. I need to take note of that
You're
shortly.
taking note. All right. So that is on that splitting loan. So I like this one. I mean, I when I have loan approval, I don't normally recommend putting everything in one basket. Okay.
Oh, yes, a comment on that one because I've just recently applied that kind of strategy. If only I knew it beforehand, that would be great. And it's because I didn't get a mortgage advisor. I directly contacted the bank, and you know how the banks work. They don't really give you details and advices because their interest is the bank's interest. But when you are dealing with a mortgage broker, of course, they're going to tell you as much information as you need in order for you to succeed and pay off your debt as soon as possible, right? So,
Yes,
yeah,
yes,
my
that's true.
advice is for them to reach out to Josie if you're more comfortable dealing with a fellow kababayan. But one more
Yeah.
question, please. When it comes to property, if you have a property in the Philippines, can you still be considered a first home buyer here in New Zealand?
No, no.
So, what would
Even
be your
that is
advice?
outside New Zealand. If you have a property in the Philippines, you won't be considered a first home buyer.
So, what would be the disadvantage if you are not a first home buyer?
Well, you won't be able to do a 5% deposit. That's the minimum because under Kainga Aura, okay, you can have a
Yeah.
minimum. If you don't have the 20%, you can buy a house with 5%, but you have to be a first home buyer who has not owned any property. So
So, if you're not
yeah,
a first home buyer,
yeah,
how much?
you can buy a house with 5%. Well, at least 10%.
10%.
Yeah, 10%. The bank would allow you to buy that house with 10% deposit.
And
But
do you need to
ideally 20%.
declare? Do you need to declare it, or you can just be quiet? I don't know. Be quiet.
No comment.
Ideally, you have to be honest, right? You gotta tell everything. The truth will set you
I want
free.
to know the story because you might say to me that I'm still in the process, okay, of buying this house. Okay, I don't own it yet. The title is not yet in my name. So literally,
Okay.
you don't know own the house yet. Okay, or it's
Ah,
an inheritance from my parents.
yeah,
Okay,
that's another.
so you are an owner if you have that property under your name. Mm.
Okay. Sounds.
Because normally, I mean, most customers that I have met here in New Zealand, they would say, my auntie is selling this property and I'm paying her, like, for example, $200 every month.
Yeah.
So meaning it's not yet his property. It's still in the
Yes.
process. So he's not yet an owner of that house. So in that scenario, yeah, you're not a home owner yet because
Yes.
most of the time that's the case. All right. Okay.
Oh, good.
All right, let's go to the next one. Okay, so this is another product. So revolving credit facility. So it's like an overdraft facility and it's a combination of offset also. So what happens here, a part of the mortgage will be put under that loan product, which is a revolving credit facility. So for example, your loan is 510,000. Okay, and I said, oh, I want to put 10,000 as a revolving credit facility. Okay, so what will happen? So that account will receive your income. Okay, so because your income is there, your income and your partner's income. So for example, that's 10,000, and your income, for example, is every month it comes 4,000 each, for example. So you only pay interest on the $2,000. And what you have put in that account, you can also withdraw. All right, it's just saving on interest. So that account, the revolving credit facility, will receive your income and you will also use that money to pay your bills, but you're saving on interest. Parang offset then. It's like the offset one.
So parehas lang. Or there's a slight
But
difference.
this one, you cannot attach the savings account, all right? It's just the
Ah,
transactional account, all right? Okay,
okay.
it's just
So
your payroll.
some
Yeah.
banks may
So it's
have
a
this.
yes. Did you say that you bank with ANZ?
Yes, I'm banking with ANZ.
Okay, they have that.
Ah,
They have that facility. So
I
you
want the
can put,
savings
I mean, your income and your husband's income, okay, and put
one.
that part of the mortgage into a revolving credit facility. So when your money is there, you won't be paying interest for that amount. Okay. All right.
I'm
So
gonna
every
ask
time
for
you
the offset.
withdraw,
Yeah,
yeah,
I'm gonna
ask
ask for
them
the
what
offset.
product they have. See if they have. I don't think they have an offset, but I think they have a revolving
Oh,
credit facility.
lipat na lang ako sa Westpac siguro.
Okay. All right. Now there are two kinds of offset. There are two kinds of revolving credit facility. No, so there is a non-diminishing and a diminishing balance. So non-diminishing meaning your 10,000 would remain 10,000 there. So you're just saving on interest. No, so you're focused on reducing the principal from the main loans. No, the other loans. But that one, it's saving on interest. That 10%, that 10,000 revolving credit loan. So non-diminishing balance. But there's also a diminishing balance, meaning slowly the 10,000 will become is reducing until it becomes zero. Okay, there is a diminishing balance on your 10,000. So that's an option for you. So if you just want to save on interest and keep the 10,000 there, it's a non-diminishing balance. But if your plan is also to reduce the 10,000, no, to pay that off, you'll go for a diminishing balance. So normally, I recommend the diminishing balance. Okay. Unti-unti, no? Nababawasan yung credit limit. Okay, and pay off your loan. All right, so you got the offset. Okay, you get the revolving credit facility. You can fine tune your loan. You can split your loan. So there are 4 structures there that you can benefit from. All right. So let's go here. All right, refix. Time to refix. Nako. All right. I don't know. The bank might be mad at me when I tell you the secret.
Kasi there were 2 words, right? Refix and restructure. Would you like
Those
to
are different
explain?
things.
Yeah. Would you like to explain?
Refix is that. Yeah, sure. Okay, refix. You have your mortgage interest rate fixed for a particular period. It could be 6 months, 1 year, 18 months, 1 year, 2 years, 3, 4, 5, 6, 6 years. That rate is locked for that
Yes.
term of interest fixed period. Restructure is changing the structure of the loan, changing the loan term, changing the product. No? It's bigger. When you do a restructure, you do a full application. When you do a refix, you just ring the bank or sign some document. Okay. So restructure is changing the structure of the loan. It could be a change of the product, okay, change of the term, yeah, or change of the fixed period if you want to change that as well. So it's much trabaho yan. It's a full application. Or coming from a principal and interest, you want to make it interest payment only, that's a restructure. Or coming from interest, you want now to pay principal and interest, that's also a restructuring. Okay.
Parang nag-apply ka na rin ng bagong
There's a
loan
big difference.
for the restructure.
Yes, that's true. Yeah. Yes. Yeah. Okay. That's true. All right. So time to refix. So this tip that I'm going to share with you came from my experience as a lender. Okay. And those scenarios with my customers. All right. So when it's time to refix, there are three ways the bank will communicate to you. No? So one is they can send you an advice 90 days before the refix period. That's 90, or the latest would be 60 days before the refix period, because you can lock the interest rate for 60 days. So when you get an email or a text message saying that, oh, your fixed rate is due to refix in 90 days, but there is no rate, no? They were just asking you to contact your bank to discuss it. So when you contact your bank, this is what I suggest you should do. Okay, suggestion. All right. You have to focus on your value as a customer. So you ring the bank. Okay, bank, I heard your, I received your advice that I'm due for refix. Okay, what rate can you offer me? Okay, so they would tell you the rate. And then would you ask the bank, where did you get the rate? And they would say, oh, that's our advertised rate. Okay. And then you would say, I've been banking with you for 10 years. My whole family, they're all banking with you. And then you would say, I have my mortgage with you. I have my savings account with you, my time deposit. I have Kiwi Saver. I have my insurance, life, home, and contents insurance with you. Okay. So everything is with you. You even help me with my health insurance. Okay. So I have this products. I mean, I have 400,000 mortgage. I have savings and term deposit of about 100,000. I have about 500,000 business portfolio with you. Okay. So tell me, what is the best rate that you can offer me? All right. And then what would the bank say? I will talk to my manager. I'll get back to you. Okay, so what will happen? No? So this is the real thing happening. So that lender will approach the manager, and the manager would say, send a request to the pricing team. Okay, because that is your value as a customer. Let them know your value as a customer. I mean, you can get a better rate because that's a significant amount of business, 500,000. All right.
Yeah.
Okay. So pricing team will come back and then contact you. So you could get a better rate than the one being offered to you. All right. So that's one scenario. Second scenario, okay, you get an advice from the bank, an email, and they have given you a rate, and you check the rate. So check that rate. You have a rate. So how will you check the rate? So check the rate. So your job is to check the rate, check if that rate from their website, and you can see, oh, that's the rate on the website. Now, how about the other banks? Okay, so this is your assignment. Okay, you have to go to that website and check all the rates. Okay, so your bank is ANZ. ANZ offered you 7.14% for 1 year fix. Okay, now you can see that Kiwi Bank is offering 6.99. Okay, so go back to your bank. All right, go back to ANZ. You say, ANZ, okay, my bank. I'm checking my options. This bank is offering 6.99. You're offering me 7.14. Okay. Can you offer a better deal than that? Okay. So check my language. You were asking for a better deal. Now you're not asking the bank to match that deal. Did you get that, Juby?
Yes.
Can you offer me a better deal? Okay, than that.
Yes.
So the least that your bank can do is to match that deal. The least that
I actually did that. I actually did that to the mortgage, what do you call this? Mortgage broker of ANZ. And at that time, the advertised rate was 7 something, but they offered us lower one.
Very good. Yeah, good job. All right. So that's the one, and that's the other scenario. Now let's go to the third scenario. Okay. Now the bank gives you a rate, and when you check the rate, it's lower than the advertised rate. Okay. So you got the special rate. So okay na ba yun, Juby? Would that be enough for you? When they offered you the special rate, when you get the email, and you check, the ongoing rate is 7.14, but they offering me 6.99. So I'm already happy. Okay, what do you think?
Got no choice. I was like, when they
Have no
offered
choice.
us,
All right.
because when I actually did my homework though, I compare the offers of other banks. I rang them up if they can offer me give me a special rate compared to the ones that they are advertising. And so far, ANZ was still giving us a better rate. So we still went ahead
Okay.
with ANZ. But if there's another way,
All right.
yes,
You
fellas,
heard of cash contribution?
that was just in
Okay.
Kiwi Saver, right?
Now you heard of cash contribution, no? When you have a new mortgage.
I don't think so.
No, cash contribution when you have a mortgage, aside from when you get a special rate, part of the pricing offer is not just a lower rate, but also the cash contribution. So with the cash contribution, you are committed to the bank, for example, to stay with them for 3 years. Because if you will leave the bank before the 3 years expires, you have to return part of that cash contribution. It's pro rata. So
Hmm.
when you took a loan, when you receive the
Mhm.
cash contribution, there is an
I
agreement that there is an agreement. They won't give it to you without that agreement. You are
oh, that's
you are committed to stay with them
yeah, yeah. So that's when
for
we first
at
secure
least
our home
for
loan.
some bank
We
3 years,
got
some bank 4 years.
we got our cash.
Yeah.
Is that a cash back? Because that's also our agreement with ANZ that we will stick with them for 3 years. But when we refix
Yes, that's the same thing.
after
Yeah.
the it's the same. So after 3 years, I don't think we have the cash contribution.
Okay, so that's the cash contribution when you first took the mortgage, no? Now, there's also what you could call a cash retention. Okay.
Ooh, that's another thing.
So, under that scenario, okay, so what will happen is that you can ask your bank, um, I know that I have received this cash contribution some years ago. I want to know, has it already, the commitment, has it already ended? Um, and then because I'm checking my options, I have this mortgage advisor helping me. Okay, so they remember in that scenario they already gave you the special rate. Okay,
Mm.
and now you're asking them if you are still committed to stay with them, nah? And you're checking your options and you're talking with a mortgage advisor and check what will happen. If the bank has that budget, they would offer you cash retention.
I should have asked that. Maybe I should ask them the next time I will refix.
Yeah.
Well, anyway,
So there's
Josie,
cash
because
retention.
we have more to discuss about because I am so interested with the restructuring as well. And I'm pretty sure you've
Yeah.
got more things to share with everybody. So do you think we can have a part two of this one, just like what we normally do as well if we have a long topic? We
Yeah,
can carry
yeah.
on.
So because I don't think I don't think that we can do the actual lending application.
Yeah,
All right,
that's
because
this the other one that we're
we
supposed to be
need
doing as
time
well.
for that.
Right. Because even within we went past 1 hour already, and I've already been taking notes of the offset and revolving and the cash retention, which I'm going to ask my bank because in few months' time I will be refixing my third part of our mortgage loan. So this is really a good idea for me. Thank you. So yes, we're gonna see you again, Josie,
Be
next week.
subtle about it.
Yes, I'm gonna get more
Yeah.
information from you on how I'm going to
Next
deal
week.
with this. Yes. Next week, is that okay? Or we can set aside
All right.
another Wednesday.
By the way, I have an event. Can I just send an
Oh, yes.
invite?
Yeah, can you
Yes.
show
Okay.
that
I
one?
have an event
Or
this
Zoom?
Saturday. Yes, I
That's
have my
Saturday here.
first home buyer seminar. This will be
Right.
this
Where
coming
about is
Saturday.
this? Yes.
It will be in
Saturday
Auckland.
here in Auckland. Where about? In the city?
Yeah, it will
level
be
4
in
Herne Bay. Herne Bay, Auckland. Oh, I haven't been there. I
Fern
don't
Bay.
think.
Yes, at 2 o'clock.
How long does the event take? How long will it
And
take?
normally it's 1 hour. Okay,
1
but
hour.
it would depend also because we're going to answer some questions after that. So this is for those who wants to become a homeowner but they do not know what to do, and for those who want to know if they're already eligible to get lending, and for those who are afraid to enter the property ladder, no? If they are, we will answer all the questions. So we'll tell them what are the costs, no? What are their
Yeah.
criteria? Okay.
I know
So
those are supposed to be the other topics that you're going to discuss more, but it's going to take us a long time because of many things to consider as well. But we are really grateful for your time today. I'll really try my best to come on the 29th with my son because we're really considering of him buying his first home within this year or early next year. So I look forward to seeing you on Saturday then. So sa mga kababayan natin dyan who are just thinking, or maybe you're not sure, it's best to come and just get a lot of information, especially during this seminar. So it's a face-to-face and you can ask questions and feel free to just use our own language because we will be dealing with a Filipina mortgage broker anyway, right?
yes,
Thank you
and by the way, Juby, they have to RSVP because we have limited seats only. So there's Larry
so
Fernandez, and that's his contact number 021 029333813. So I will reserve 2 seats for you, Juby.
yes, please. I will come at 2
Yep.
p.m. 02.
Okay.
I'm
All
gonna
right.
pause this
Because
video later to take
we
more.
cannot accommodate big number of
Oh,
people, no? All right.
all right.
Because it's
Okay.
just a boardroom. Yeah.
Yeah. Oh, thank you
Limited
for
seats.
reserving 2 seats already. We will be coming with my husband. Or yeah, definitely will come. Thanks so
Okay,
much,
so two
Josie.
seats for you, Juby. Okay,
Thank
good
you.
night and salamat po. All
Yeah,
right,
I
all
look
the
forward to
best
seeing you
to
next week.
everyone, and hope all those tips would be able to help you, no? With your dream of saving on interest and paying off early.
It helps me a lot anyway. Thanks so much for that. All right, everybody. So you've heard that one, and we're gonna carry on next time as soon as Miss Josie has some free time again, because this topic is quite broad. We are dealing with a mortgage broker, and she's free to give away the information, and that's really a big thing for us, mga kababayan, especially if you're new here and you just want to start knowing more about first home buying. So I'm inviting you to just I will leave the number in the comment section so that you can contact Miss Josie if you want seats to be reserved for you, just like what I did. So, sige po, salamat sa lahat. And I'll look forward to seeing you again next week. Bye.